Back to another video, and today we are going to take a look at the USD ZAR from a technical fundamental order flow as well as a sentiment perspective. Now if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm, and as always, let me know down in the comments below exactly what it is that you would like me to cover in my next video. Now there's no greater time to buy the USD ZAR because everything currently in South Africa is a living nightmare. Now, a lot of you probably know that load shedding has been one of the key driving factors behind why things has not been looking so good. After coming out of a pandemic, you jump into load shedding, and if you think that's worse, we've just hit stage 6, where you can expect the power to be off at least 8 hours during a 24-hour period. Now, without any further ado, we are obviously going to start with the technical analysis and then work our way through the fundamental and then look at some sentiment data there as well. Now, if you start on the monthly time frame, it's quite clear that we can see the market had broken above this very strong level of resistance. This level over here acted as resistance multiple times. Market broke above that, came to test it as support. You can see the market is ready to move that rally to the upside. Now we can potentially expect the market to go and hit that previous high that it created during the pandemic period there as well, because we are expecting the dollar index to increase in value in the long term. Next up, on the weekly time frame, what do we see? Now from a weekly perspective, it's clear that we had this very beautiful structure that the market created over there. Resistance broke above that, came to test it as support. The most important information that we can see over here is the market printed a massive impulse, soft impulse. You got the correction. Now if you take your Fibonacci from the low to the high of this massive impulse, you can see the market tested and rejected the 61.8, which is known as the golden ratio from a technical perspective. Now if you want to measure the next impulse, all you do is take your Fibonacci from the low to the high of the correction, and you can see we've got the minus 27 lining up perfectly with this level with the structure that the market had created over here. Now this is not only the take profit level, but this is also a previous structural level that the market had created over here, and this level over here acted as a strong level of resistance. Once market broke above that, a strong level of resistance and support. Market broke below that support, came to test it as resistance, and we can see how the market started to melt to the downside. Definitely a good possibility for the market to go and test that previous structural level at 16.62904. Now we're going to use that as a long-term target. Now if you drop down on the daily time frame, what do we see? Now from a daily perspective, you can see we have a lot of liquidity wicks in the market over here. Now the best way to identify the structural level over here is quite simple. You just go from a candle chart to a line chart, and you can see the market had printed a W formation. After a W formation, you expect to pull back to the neckline before the continuation to the upside there as well. So we can definitely expect the market to pull back first before start that continuation to the upside there to complete the W formation at the neckline there as well. Now the best way to approach the situation is quite simple. All we basically need, friends, is a clear daily close above this level for the market to complete this W formation and then hit the neckline of the W formation and then start that continuation to the upside. So we are basically just going to wait for the market to give us a daily close, and then what we're going to do on the retest, start looking for buying opportunities for the market to go and complete and hit the minus 27 as identified from a weekly perspective there as well. Now there's a good saying, my friends, the strength of a country's economy is dependent on the strength of a country's economy. Now that is exactly what we're going to look at there as well. Firstly, we know South Africa is not doing too well there as well. Last week we had a report from Fin24 saying inflation breaches upper limit of Reserve Bank's target. Reserve Bank target. Now we know inflation has been a problem. Zimbabwe's inflation went up to 192, so things are currently crazy, but this is the price that you pay when you lower interest rates throughout the pandemic period. However, we can see a consumer inflation for May ticked up at 6.5 from 5.9%. Now that's a massive hike. Now if you think about it, I always say when inflation goes up, you expect the interest rates to increase, and as a result of that, the country's currency needs to increase as well, because investors tend to invest in currencies that has got a higher return on interest. It says here this breaches the upper limit of the Reserve Bank's target range, which is between 46%. They're way above. I won't say target, they are actually over delivering in a bad way. Also says here increases were mainly driven by food inflation, transport, as well as housing and utilities there as well. Now we know that the supply chains is still quite, it's still bottleneck, but at the end of the day, we are in the situation that we're currently sitting over here. The next thing that I do want to speak about is we're going to just quickly swift over, what we got next in line over here, and it just comes out, and we currently know that Eskom had their people protest. And it says here, article from Reuters says here, protest force South Africa Eskom to widen power cuts. Now, the problem with this is a lot of businesses, and we have just moved over to stage 6 load shedding. And for as long as they're going to continue to strike, the longer these are going to impact not just consumers but businesses as well. Remember that businesses run off the back of, you need electricity as a business at the end of the day, right? To run your business, and the economy is dependent on businesses. The employment and all of that stuff runs for businesses. Now, when you have times where power is going to be off for 6 hours, like tomorrow, you can expect the power, like I said, to be off for about 8 hours throughout the 24-hour cycle. That means that businesses are going to be impacted negatively by that, which is further going to reduce or further going to negatively impact the South African GDP when we get those numbers when it comes out. Now, investors, they know these things. These are things that they look at, right? They see, you know what, they're sitting with a problem that they can't even fix. Yes, we're going to get higher interest rates, but what does these interest rates mean if and only if businesses is not even sustainable, because they have these problems that they need to deal with? And as a result of that, the dollar index will always be a dominating currency. There will always be a strong currency. And people in the US, they don't have load shedding problems like we have over here. But we also have another problem. We also have the expectation of petrol prices increasing again. Where are we now? We are currently in June. Yeah, so we're expecting petrol prices to increase next week, Wednesday, with another 270 cents. So that basically means that we are effed up here in South Africa. So we have all of these things that we need to, to think about as a country, and currency as a country's currency. And if you think about it logically, if you think about it from an investor's perspective, would you invest in a country that is you let me know in the comments. Would you invest in a country that is in the current state as what South Africa is, or would you invest in the dollar index that is expected to grow in the long term? You let me know in the comments below, my friends. Next up, we are going to talk about some dollar index fundamental data. So we're still striving at the back end of the interest rate decision from Powell. It says here, Powell tells Congress the Fed is strongly committed on inflation, knows recession is a possibility. We know that is what he said, but we still know that the outlook for the dollar index will remain bullish up until we get some concrete evidence that inflation is going to slow down. And the only way for us to see that is to see inflation numbers come lower. It says here, Fed Chairman Jerome Powell said Wednesday the central bank is strongly committed to bring down inflation and can do so with its monetary policy tools, which is interest rate being the most important tool we know. They say tools, but they just talk about interest rate. That means higher interest rates until compelling evidence. Yeah, that's exactly what I said now. Jesus, like they should actually pay me to say these things for them. Any case, next up, we are going to look at some sentiment data. Sentiment data tells us what retail traders are doing in the market. And it is no surprise that we can see over here that we have 56% retail traders that's selling the market. Then we can see that we have 44% of retail traders buying the market. Now, this is based off the last report. And you can see that the dollar index was quite bullish, and we can expect this bullish momentum. Now, some forex gurus is going to come out and say, yes, looks like a bullish flag. It's not a bullish flag. The market is going to continue higher, whether you like it or not, until something comes out and save this country and their currency as well. Next up, we are going to take a look at the order flow data, so the commitment of traders, and this tells us what let me just close that. So this tells us basically what the big banks, hedge funds, and institutions are doing in the market. And by looking at this data, we'll have an indication. We just use it as an indication. as a further confluence in the market here as well. I can see here based off last week's report, hedge funds came in and they added 139 buy positions and they closed 449 sales positions. But the overall momentum or the overall net positions is still quite bearish because we're down with just over 7,000 points over there as well. Now, with that being the conclusion of this video, I want to let you guys know that you can expect that the USD ZAR to continue an increase in strength, and we are going to buy this market for as long as we can. We could potentially go up all the way, but as retail traders, we need to take it one step at a time. Now, that's all from my side. Thank you for your time, and as always, cheers for years.